Good morning, folks. This is Naim Azam live from London. I come with a wealth of 10 years of experience as a hedge fund trader, and I've worked as an equity trader for Bank of America. Currently working as a chief market analyst for Evertrade, and I'm here to help you, to guide you in order for you guys to become a more successful trader. So let's have a look at the markets and let's see where the opportunities are in terms of your buy and sell zones. But of course, just a bit of a disclaimer, this video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, when we look at the European markets, what we are seeing is that yes, there is a surge to the upside, and that once again, when we refer to the European markets, we are very much referring to the stock 600, stock 50, and in terms of a German market, when I'm referring to the DAX. The French market means CAC. The Italian market means the FTSE Mid. Now, when we're looking at these markets, they are driven up to the upside on a number of factors. The first one being that yes, investors and traders are still very much hopeful that a stimulus package will be passed from the US, and that will boost the market. Now, you may be wondering why that is so important for the European markets. There's always a spillover effect. If the US markets continue to perform well, we will see the European markets also moving higher as well. But the major concern among investors and across the board is the surge in coronavirus cases, because right now what we are looking at a situation where we are seeing sweeping national curfews across Europe, pretty much so. And of course, the first national lockdown was brought back by Ireland last week, this particular week. Now there are rumors that we could see a national curfew over in Italy. Imagine how that imagine how that is going to influence the overall situation, the economic growth, the economic activity over in Europe. Of course, it is going to have a negative influence, but looking at the economic numbers which were released today, the PMI services and the PMI manufacturing, and by the way, these are like they always produce massive movement in the currency. The currency that you wanted to focus on is your euro dollar, because obviously the data is coming out from the Eurozone. So that is a currency that you very much focus on. The number has confirmed that yes, the services are still going down, but the manufacturing has started to improve. But overall, the impact on the labor market is that yes, unemployment is not rising, but at the same time, we are not seeing any improvement with respect to the employment situation as well. And with this continuous rise in coronavirus cases, what is likely to happen is we could see the unemployment surging once again, because obviously the manufacturing activity could see some sort of a weakness coming in the days ahead as these national curfews will continue to come into play. But overall, in the US, very much focus is on the US presidential election. Only 11 days are left. 55 million Americans have already voted. They've already made the decision who is going to be the next president of the United States. And it is likely that Trump is going to come back as a president for his second term. But overall, markets are still very much concerned how those relationships will really going to be between the US and the rest of the world. Because we know under Trump's presidency, China and the US relationship has deteriorated massively, and that had an impact on the market. But Trump is also good for the stock market. If he comes back, that means higher moves for the S&P, Dow Jones, and the Nasdaq as well. Now, to finish off, keep an eye on the earnings, because next week we are going to hear from all the large big tech companies such as Apple, such as Google, such as Facebook, such as Twitter. These numbers are going to produce enormous amount of volatility for the Nasdaq index. So any retracement or move to the downside could really be an opportunity to buy the index at a much lower price. All right, folks, that's all for today. See you guys next time.